Issue that impacts a lot of people, including me and you. One of the leading banks of this country, ICICI Bank, has sharply increased the minimum average balance to 50,000 rupees from 10,000 rupees. Now, there's a lot of backlash online. People are saying that this is loot, this is an elitist form of behavior, and it's thuggery of the middle class. In order to understand why such a huge step has been taken, I'm joined by CNBC-TV18's banking editor Ritu on the broadcast. Ritu, there are a lot of questions, there's a lot of anger that people are expressing after this announcement. For the benefit of you, for viewers, let's start with the basics first. What are the new changes?
Well, Archana, thanks very much for that. Let's start with metro and urban areas because there are differentiated rates depending on where you as a customer have your bank account. So in metro and urban areas, if you have a savings bank account with ICICI Bank, the minimum balance that you need to keep in your account is now 50,000 rupees. That is a 5 times increase from the earlier 10,000 rupees. In semi-urban branches, it has risen from 5,000 to 25,000 rupees, while for rural branches, the amount has been doubled to 10,000 rupees, making this, the highest minimum balance that customers have to maintain in a savings bank account across any bank in India.
Okay, another important question, when does it come into effect and how are the existing accounts going to get impacted?
Well, that's an important point, Archana, because for existing ICICI Bank savings account holders, there is no change. So if you already hold an account with ICICI Bank that was opened before the 1st of August, whatever was your earlier minimum monthly average balance requirement, which most likely was 10,000 rupees, it stays there. The hike is not for you. The higher minimum average balance requirement is only for new accounts that are opened effective the 1st of August. So existing customers do not see a change.
Right. Now, amidst all this, everybody is asking one question. Why such a steep hike?
Well, Archana, it is astounding because the hike is so significant and this is the highest, like I said, across any bank in India. We have asked ICICI Bank, an explanation for this and we're still awaiting a formal response from the bank. But in the meantime, from an economic point of view, yes, it makes sense for the bank, maybe not for the customers, but for the bank for sure, because, customers that would typically have 50,000 rupees or more in their bank account at any given point of time are more stable. They have higher disposable income and therefore they are less likely to, just close the account for small grievances. Now, this kind of stability also helps the bank plan their liquidity better. And most importantly, this is the cheapest source of funds for any bank. Even with the higher MAB, that is minimum average balance, the saving account customer typically gets paid anywhere between 2 to 4, 3-4% interest rate. That is much cheaper than the bank would have to pay for fixed deposits, which would be at say 5-6% or higher. So, the bank is able to attract and retain high balance at a lower interest cost, and therefore they can expand their margins without taking on higher costs. High balance customers are also likely to buy, better, rewarding credit cards, personal loans, home loans. The bank can also target a more premium offering for them. Therefore the revenue per customer will also be higher. Larger balances can also be cheaper to maintain than servicing a lot of smaller accounts that typically generate lesser revenue for the bank. And of course, naturally phase out inactive low balance accounts. That is a cost for the bank to maintain.
Right. And what happens if the customers don't keep the minimum average balance? What's the penalty?
Well, Archana, as is typically with, any bank, if you are not able to meet the minimum balance requirement, there is a penal charge. In the case of ICICI Bank, it is 6% of the shortfall or 500 rupees, whichever of the two is lower. That is what the customers are going to be charged.
Correct. Let's understand the fundamentals behind it for the benefit of our viewers. And as you've already explained that it's going to benefit the bank, what is MAB and how is it calculated?
Well, what is MAB is minimum average balance that customers have to keep. It is simply the average. It is not something you have to maintain, something every day. Now, to answer why banks even have this minimum average balance requirement, it is to basically cover, the cost that they have to, incur to run branch operations, to have ATM networks, IT systems, issue debit cards, customer service, compliance check. So having a minimum balance helps the bank offset some of these costs. It also helps the bank maintain low cost of funds. As I was explaining, the money that is kept in savings account is a cheap source of fund for them. And so by enforcing a minimum, they're ensuring that there is this stable pool of low cost money that they have available to lend or to invest, and of course to discourage dormant low value accounts. Public sector banks, by the way, often keep very low, zero minimum, balance to encourage financial inclusion. They've also been mandated to do so by the government of India, whereas the private banks will tend to have a higher minimum balance to position themselves as premium service providers and so on. So how is this minimum average balance calculated? Important to understand. 50,000 monthly average balance is just that. It is an average. You don't actually have to keep 50,000 rupees in your account every day. For example, if you have 20,000 rupees for the first 10 days of the month, 70,000 for another 10 days of the month, and 60,000 for the last 10 days of the month, in a 30-day month, your average balance will come to 50,000 because you will total the day-end balance and divide it by the number of days in the month. That will give you the monthly average balance. Another important calculation is that, this is not the sum that is only counted as the money that you've kept in your savings bank account. For instance, if you have an RD or an FD with the bank and together with the saving account, balance, if it totals 50,000 rupees, you're still able to meet the requirement without actually having 50,000 rupees in your account.
And is it a common practice? How do other banks fare? What is the minimum balance across other banks?
Well, Arjuna, for private banks, more or less the minimum balance you have to maintain in, urban metro branches is typically 10,000 rupees. And for the last decade or so nearly, we haven't seen this amount change much. But for public sector banks, especially after COVID around 2020 or so, a lot of them like State Bank of India, PNB, Bank of Baroda, Canara and all completely waived this requirement of having any minimum average balance to encourage financial inclusion. So if you look at private sector banks, typically it is about 10,000. But if you get, higher benefits, for instance, pro account, this account, that account, saving account, then the, minimum average balance requirement also goes up. For instance, Kotak for pro will have 25,000. Access for some kind of special accounts will also have a higher amount. So it depends on the kind of savings account you have. But on average, it is about 10,000 rupees in private banks.
All right. Let's also take some questions that are coming in. A lot of people are concerned whether their salary accounts will get impacted by this move. And also, somebody has asked, what is the difference between basic savings deposit account versus the account with minimum average balance requirement?
Well, to answer that, let's also quickly tell you certain types of accounts, savings accounts, are still exempt from this higher minimum balance of 50,000 rupees. For instance, existing accounts, of course, don't get affected. Salary accounts, and that's a good question. If you have a salary account with any bank, it typically comes with a zero balance requirement, so that does not get affected, even with ICICI Bank. Pension savings account, again, come with zero balance requirements. Then there is something called basic savings bank deposit account that you mentioned. That is mandated by RBI. All banks have to have this basic saving account deposit facility. But there are certain stringent requirements with that. It is typically targeted towards, the weaker section of the society. For instance, the total credit in these basic saving accounts cannot exceed 1 lakh rupees per year, and the maximum balance is also capped at 50,000 rupees at any given point of time. So a very, very basic account with, virtually no additional services that are provided. That is that. And of course, Jan Dhan accounts are also exempted.
Right. Like I said, that there's a lot of backlash, but some of them are asking very, reasonable questions that, 50,000 rupees is a big amount for people to park there. And somebody has asked that why should a fresh employed person park 50,000 in a savings account where the interest rate is so low?
Well, Archana, there are many benefits to having, a savings bank account. But before we get into that, as a salaried person, if you're looking to open an account now, you have various options. You don't necessarily have to go to one bank or the other. I mean, for instance, public sector banks, they have zero minimum balance requirements, so you can pick with any of them or even with private banks, if you're looking for differentiated services, the minimum balance requirement is about 10,000. So no, you don't necessarily have to go to ICICI Bank and, be worried about this 50,000 rupees of, minimum balance requirement, because, for a young salaried person, if the salary amount is not that large, you typically wouldn't want to lock up your money in a savings bank account where you're barely earning 3-4%. So there are various options available in the market, and of course, you're free to choose from them.
Right. Ritu, a lot of people are actually engaging with the stories that you posted. So I'm going to read a couple of comments from there. A lot of people are saying, is this some kind of a joke? Is it allowed by the RBI? It's the downfall of ICICI Bank. Never had saving accounts with ICICI. So there's a common thread that binds all of these questions. Is ICICI Bank breaking any rule, or can the RBI intervene here?
Well, let's be very clear. There is no rule that ICICI Bank is breaking by saying you have to keep 50,000 rupees in your account, because the fact of the matter is that the regulator, that is RBI, has not prescribed any minimum threshold for, this average balance that banks can ask their customers to maintain. In fact, just today, a short while ago, we heard the Reserve Bank of India Governor Sanjay Malhotra say it to this effect, that RBI has left it to the banks to decide on the minimum balance. Every bank can have their own minimum balance requirement, and this is not under any regulatory domain. But that said, RBI broadly does say that all bank charges should be reasonable. Although it doesn't define what reasonable is, it says charges should be reasonable, and they should be commensurate with the cost of rendering these services. So yes, there is no RBI rule that ICICI Bank is breaking. But that said, we'll see. The regulator hasn't really taken any action against this, and because the fact of the matter is no rule has been broken yet.
Correct. Another set of comments that I would like to read, like people are obviously pointing out the big jump in urban areas, but also in rural areas, that's also seen a steep rise. People are also saying that they're going to boycott. This is, of course, the social media chatter that is coming in. But there is the sentiment is that this is a very elitist move, that one of the leading banks of this country is catering to a particular segment, to a particular economic section of the society.
Yeah, well, yes, Archana, I mean, that is a fact, because we're living in a country like India. I'd like to actually quickly point to a tweet that was put out by Kotak Mahindra Banks, or rather Kotak 811's Jay Kotak, where he said, he's pointing out to some data where he says 90% of India actually makes less than 25,000 rupees a month. So a 50,000 rupees minimum balance actually implies that 94% of Indians' monthly income is to be left with a bank at all points of time. Makes no sense. So you are excluding a whole lot of people when you're setting the bar that high. In fact, even with 10,000 rupees, 60% of Indians earn less than that. Those comments are valid, but like I said, there are options in the market, and there are banks like public sector banks that offer zero minimum balance requirements as well.
All right, Ritu, we have run out of time, but thank you so much for simplifying such a significant move for our viewers, how it impacts them and what kind of accounts will be exempt. We will keep coming back to you to understand more about this story. With that, it's a wrap on this YouTube chat. We'll be back with more.